and welcome to this Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to cover 3 different patterns that you should look for if you're interested in trying to find the next stocks that could become big runners after or if the markets bounce off their moving averages. So I'm focused on these particular patterns because, as you can see in the SPYs here, it's hovering right around its 50-day moving average, this blue line. And the Q's right on its 50-day moving average. And the Dow just bounced off its 50-day moving average. And the IWM down here in the lower left, this green line is actually its 200-day moving average, and this is a big line of support here. Before I get started, if you're just finding us on YouTube, please make sure to check out marketgauge.com/tutorials for more videos just like this, and you can also make sure that you're watching this in HD with the settings down below. All right, let's get started. As I just said, markets are sitting right near their 50-day moving average. Now, if the markets do dump lower, then the stocks that I'm going to, or the patterns I'm going to show you, will probably be impacted by that. But as you'll also see, many times these particular patterns, if the stocks hold up and they do a test like they did here in the SPYs, these particular patterns will keep the stocks from having significant declines and probably keep you from getting stopped out. Now, this same pattern that I'm going to show you would have worked and should have been applied in all the times that the market comes back to these major moving averages. It's true also when you get to the 200-day moving average. So yes, I'm focusing on it right now, but really this is something that if you keep in your bag of tricks, you'll be able to apply at future retracements to big moving averages. So let's take a look at what these patterns are. All right, I'm going to start with Visa, but there's 3 patterns I want to show you. I want to focus on the fact that I've got the SPYs down here at the bottom of my screen, and this is just the 50-day moving average. We're really just going to highlight on 50-day moving average retracements to keep this simple. And when you have a 50-day moving average retracement, you want to look for 3 patterns, 3 potential patterns in individual stocks or even in other ETFs. The patterns are: 1, that your symbol that you're watching makes a new high even while the SPYs are still trying to figure out whether or not they're going to hold their 50-day moving average. The second pattern is one in which the market has a shallow retracement. Maybe its retracement is only to the 10-day moving average while the whole market is going to the 50-day moving average. And the third one is a pattern where your stock is actually rising as the market is pulling back to that 50-day moving average. Now, if you're looking at that pattern, you want to make sure that the stock you're looking at isn't a defensive stock that's going up because the market's going down. So let's take a look at each one of these patterns in some examples of individual stocks. Now, in the case of Visa, we've actually got both patterns, but the one I want to focus your attention on most recently is you can see when the SPYs came down and got hit pretty hard, so did Visa, right? But Visa just came down to its 10-day moving average. So when the stock started to turn back up, Visa actually went out to new highs really quickly. So this is a potential new high that you would want to consider as a breakout that could work. Like I said earlier, in this case, this stock is so strong that when the markets went down and tested their lows again, it held up and continued to move higher. Now, I wouldn't at this point advocate getting into Visa now just because it's kind of well on its way and there's other stuff out there that's more timely. But as you can see, by focusing on this particular pattern, it would have put you in the right place at the right time. Now, the same thing was true back here. As the markets came back off of their 50-day moving average, Visa was really quick to move out to new highs. Now, in addition to just looking at this pattern, we also look at an indicator that we've created that demonstrates market leadership. Because essentially what I'm telling you to do is look for the stocks that are really leading the market higher. All right, now we measure that leadership in multiple time frames. And the blue one is the fastest time frame, the red one is an intermediate, and the black one is a longer term time frame. So when we have a stock that has its blue line over the red line, it means it's a market leader. And those are the stocks we want to focus on when they pull back to their support level. So in the case, you can see of Visa here, it pulled back to its 50-day, just like the overall market did. But when it started moving up, it was demonstrating strong leadership. It also demonstrated strong leadership with its red line over the black line. Now, the other thing that we use this indicator for is to give us further confirmation of stocks that are breaking out to new highs. You want to be buying stocks breaking out to new highs that have good leadership, not stocks that don't have leadership that are likely to roll over. Now, you can see also one of the best scenarios is if you've got that shallow pullback and your blue line doesn't even get close to your red line, then you know that the momentum and the leadership is solidly in place, and another breakout to the upside is one that'll have a high probability of moving higher. Now, as I said, if the SPYs turn around and have a major collapse here, I would expect that Visa is going to get hit again. But I do know if Visa gets hit and gets pulled back to this support level and it's still showing leadership, that would be another opportunity to buy the dip in Visa when the market's dipping. All right. Again, you can find these patterns just by looking at the charts, or you can use what we call the market gauge triple play price leadership indicator. So let's take a look at another example. Lockheed Martin. All right, so Lockheed Martin is a good example actually of both. Again, you can see when the SPYs pulled back in July to their 50-day moving average. At that time, Lockheed Martin did the same thing. But when Lockheed Martin started to move up, we got the confirmation with good leadership in here. And therefore, we knew that that breakout would be a breakout that we'd want to follow. Now, again, when it breaks out to new highs once again, we've got good leadership here. And you can see we've had a nice move. Now, this is a really good example currently of a shallow pullback and strong leadership. So if Lockheed Martin gets over its resistance right in here, it's probably going to be a good opportunity for another run to the upside. And my guess would be that as long as the market holds up, the market might not make new highs, but if Lockheed Martin starts on a new leg up and the leadership line is still in gear, that's one I'm going to want to focus on. Now, again, you could find Lockheed Martin right here with just looking at the patterns. It's back, trying to get back over the 10-day while the SPYs are just trying to get over the 50-day. And you can do that too, but with the leadership line, we have a slight advantage. All right, finally, one more example that's a little bit different in nature, and that's the pattern that you have the stock rising as the market's going down. What do I mean by that? Well, as you can see in this period here, kind of going into July, the market was flat to headed down. But Alexion was actually headed up. Now, it's in a process of a big base, but what you want to focus on is it's rising when the market's falling. And what that's telling you is that there's something going on in Alexion that's stronger than the overall market. Now, that's not reason enough to just buy. But when you get a situation where it also changes its phase, if you're a follower of market gauges, then you know what I mean by changing a phase. It's moving through one of the major moving averages. In this case, it's going through the 200-day moving average. And it pulls back a little bit at the final tail end of this pullback. But now, with the market heading higher, it's now got a tailwind behind it. And a breakout over its consolidation here is what you're going to look for. So basically, what am I saying? It's moving up when the market's either going sideways or down. It may pull back a little with the market continuing to pull down. But then as soon as the market starts to head higher, it's now got a tailwind behind it. When it breaks some resistance to a breakout to the upside, it starts to move higher. Now, the benefit of finding stocks like this is how you can find stocks that are kind of moving out of bases, even though the market, like we are here, is at new highs. The benefit of this is that when the market kind of rolls over from a new high, you're not in a stock that is at 52-week highs here. You're in a stock that's pulling out of a base. And hopefully you can see that it will do what Alexion has been doing now, which is as the market is selling off, Alexion is just consolidating, and I would say it's consolidating and getting ready for another big move up. And if the market moves off of its 50-day moving average, you'll be looking at getting into a stock coming out of a base as the market's breaking out to new highs. So that's one way you can get into stocks in bases using pullbacks in the market to tell you which stocks have this internal strength, right? And again, that leadership line, as you can see here, is telling us that same story. You can see the red line, the intermediate term leadership has gotten stronger as this has gotten stronger as well. And the blue line has been above the red line through this whole thing. So this is one that we'll focus on. All right, so I hope those three patterns help. Again, what are you looking for? You're looking for faster new highs, you're looking for a shallow retracement, or you're looking for a market that's rising a stock that's rising while the market is falling. Keep an eye on those three patterns, and they should give you plenty of great ideas for trades, especially when the market pulls back to major support like the 50-day moving average. And if you want to learn more about how we use the market gauge triple play price performance indicator to confirm these moves, even scan for these moves, and just give us a much better insight into the health of any trend, I'll put a link below this video, and you can learn more with that link. Hope that helps, and I'll see you in the next video.